Welcome to No Hits Radio, where we dive deep into the uncharted waters of technology.
Good morning and welcome to the Morning Express show on No Hits Radio. I am your host, Joanne Kaberia, and today we have, and this is yet another segment on Tech Talk, and we have insightful conversation lined up for you on dynamics of the startups in Kenya. But before we kick things off, if you have missed some of our episodes that we have done on our YouTube page, you can always visit our page at No Hits Radio and catch up on our conversation. So today we have a guest. He will introduce himself, but before that, I would like to state a fun fact about him. Did you know that he was a dreadhead? And is a man who wears many hats. He is known as a CIO, CTO, a consultant. And I would like to leave it to him to introduce himself. My dear guest, the stage is yours.
Hi, Joanne.
Hi.
My name is Timothy Laku.
Mhm.
I am a fractional CIO and fractional CTO for startups and also for social impact organizations. What fractional means is that usually a startup doesn't have the budget to bring in someone who has 20 years experience, right? Like they're going to be too expensive for them. They're a startup. They need to manage their costs. And so I come in for a fraction of my time.
Right.
I give them the CIO, the CTO services, right? For a fraction of my time. That's why it's called fraction. It means I am not doing 8 to 5 with that startup. I am giving them maybe 2 hours in my day, while I have, of course, 8 hours in a day to give to other social enterprises or to other startups. So I could be working with about 8 or 5 different startups at the same time, or in a good week, probably about 10 at the same time. So I have 2 hours with startup A, 3 hours with startup B, 1 hour with startup C. So basically I stretch out my day in that kind of way. So that way they get my time, my experience, my skills, but at a fraction of the cost, which is their budget, right?
Okay.
So that's what it is.
And from your portfolio, you've overseen over 30 organizations. How long have you been in this game?
I have been in this ecosystem for now 21 years.
Wow.
It's been a while. I know I don't look that old.
Aging like fine wine, you say?
Exactly. It's been amazing. Like 20 years just working with so many organizations. If I was to count, I've probably done over 100 digital transformation projects with different organizations. More than 30 of, I think, startups over 20, social impact over 30, worked with executive teams at board level, maybe about 15 plus. So it's been a while. I mean, 20 years is a long time.
It is.
Right? From the days of black screen doors to now we're talking AI. I've seen it all. Like it's just amazing how that sector has actually changed.
All right. And I'm not going to let go of your fun fact. A dreadhead.
Yeah.
How?
Dreadlocks,
I
right?
wouldn't have imagined you in dreads. And I saw that picture that you sent.
Yeah.
When you said dreadhead, I mean, I thought it was like shoulder length.
Yeah.
What made you like quit on that level?
So basically, I work with software engineers, right?
Yes.
Like, people who are building technology products. And these guys are amazing. These guys come to office wearing shorts. They come in office wearing vests. I had a guy in one of the companies that I was overseeing, their tech team, literally sleeping in the office for like 1 or 2 days in a week. There's a guy who brought in his kid and, he was just there coding. And his son, who's like 2 years old, was just next to him the whole time, right? So I have seen like so many weird things. I wouldn't call it weird, but I feel like developers have a different personality.
Yeah.
Most of them are introverts. They're inside themselves. They're just thinking about what they're doing and they're focused. How does this code go from it's not working to I need it to work right now? And that's where their focus is. And so they don't care about how they look.
I know.
Or how they talk or how they sound or whether they whether you like them or not. They don't. Like they
It's just in that cocoon, their bubble.
Yeah.
And they're comfortable with it.
Yeah. So a team once challenged me and said, we don't think you're gonna put on dreadlocks. I said, watch this space, hold my glass. That's how it started. I was like, okay, next day, started doing it.
All right.
The funny thing is that right immediately after COVID happened, and then now we are locked in. and then we are not outside, obviously, and then like I just built it out. So throughout COVID for about 2 years, it was just growing, and I was twisting it. Guys are asking me like, "How are you doing it?" Just take one of those things. I think it was a do-it-yourself project for me.
Yeah.
Just work on my hair,
Yeah.
use one of the bathroom stuff, rub on it,
Yeah.
like continuously put oil on it, and then it just grew. Just grew to what it is. The picture I sent to you to look at.
That is quite interesting. Imagine I wouldn't have pictured you in dreads, but you look good. You look good.
I used to jump on virtual calls. People who saw me like a year before and a year after, and then I put on my video, and then what? And I'm like, long story. Let's go to the agenda. When we finish, we have time. I'll talk about my dreads. Like that's how it used to be.
All right.
But it was fun. I enjoyed it.
Nice.
I felt like I connected with my team. Yep.
I'm happy for you. That's great. So, I'm really excited about this conversation that we're going to have. I actually, choosing the title, I felt like it speaks more about this conversation, the startup story.
Yep.
I would like us to talk about the conversation of how Kenya, Kenya is dubbed as the Silicon Savannah. It's a home of this tech ecosystem, and it has seen a lot of startups emerge, and also other startups shutting down because of various factors. And I would like us to explore those trends, the challenges, the misconceptions, and anything around those emerging and the hype behind startups. Yes. And so far, let's talk numbers. So I did my research a little bit, and it's they say there are over 8,000 startups in Kenya. And with over 1,000 funded companies have allegedly raised $10 billion in VC, that's venture capital money. And yet again, we are seeing over 1,000 startups shutting down.
Yeah.
But before we go into the reasons why they're shutting down, I find startups really unique, the way they're determined and their spirit to innovate.
Yeah.
What, in your perspective, what makes startups unique for you and special?
So I think the right way to look at this is to think about society in general, right? Like if you took human beings out of this planet, would we need startups? The answer is probably no, right? Yeah. The startup is coming in to be able to address a gap that exists in society. If you think about all the other sectors, think about healthcare, right? Yeah. If not everybody is able to get health services at the hospital and cannot afford that, so there's a group of people who can't access that health service, right? A startup comes in and says, how can we deliver the healthcare that this group needs at the cost that this group can afford, right? So there's a gap in society. Think about education, right? So not everybody can go to these Ivy League schools. They can't come to Nairobi and afford, I don't know, 100K per term for us for classes, right? And so there's a group of people in society that need to access education, but we need to be able to deliver that education to them. So the startup comes in and says, how can we deliver education to an underserved group of people at a price point that they can afford? So the point here is that there's usually gaps in society. There's usually needs in society, and startups are usually coming in to fill those particular gaps. Yeah. One, maybe the infrastructure of government does not necessarily reach everywhere. And so therefore, a startup says, I'm going to take it from where government stops and I'm going to extend it to the people that actually need to be able to do that. So in this case, I'm thinking more around social impact, right? Yeah. If you think about all the other sectors, what's exciting about startups is startups are coming in to be able to fill a gap, to solve a problem in society. And that's really why we have so many of them. Yeah.
All right. And when you talk about startups, we normally see the term that goes around startups is funding, investor, venture capital. What could you differentiate those terms? Venture capital, pre-seed funding, Series A, Series B. What do they mean? You can start with venture capital.
I think even before starting with venture capital, there's the very initial stage, which is the angel side. Right? There's angel investing. Angel investing in this case is you have a great idea as John, and maybe you need 50K to get it started. you will not necessarily go look for venture capital or VC and start pre-seed and all of this other stuff. What you're going to do is do the basic. You're going to call your friends or your family and say, you have a 5K here, 10 people you're going to reach out to, they're going to put the money together and you're going to get your 50K, right?
Yeah.
Angel investing in this case is someone who knows you, family friend, gives you money because they have some money to give you.
Yeah.
And they don't necessarily need a share of your company or your idea. They're just happy to like give you the 50K and you go and start this idea. Maybe they want it back later. Maybe they don't. Sometimes they don't really care if you lose the money. So angel investing is like the very beginning. It's like stage 0, right? And then when you become big enough and you have what we call product market fit, like you've tested the market and you're like, oh, they're customers for this idea that you have. They're customers who are actually buying. And then now you're getting the attention of people who are like, how can you go from serving, I don't know, 100 people to 1,000 people? You will need money for that, right?
Yeah.
You will need to now grow your team. You need to now maybe buy new things to be able to now scale to that particular level. To go from 1,000 to 10,000, you will need more money. From 10,000 to 100,000, you will need more money because you need more resources to be able to scale the idea. The idea hasn't changed. You just need to be able to reach more people. So we're talking about reach here in terms of impact. How many more people can you serve with this idea that you have within your startup? That's where now the VC the venture capital funding starts to come in. What VC does, without getting into the technicalities of it, is basically you have a great idea. They can see that there's traction with this idea. You've been in the marketplace for like a year or two, and they can see you've gone from like 10 people to 10,000 people. And then now they're interested. They're like, oh, we can get you to 1 million people.
Yeah.
And you're excited. Okay, 1 million people, yeah? I was serving just Nairobi. Now I can serve the whole of Kenya. Exciting, right? But you need $10 million, right?
Yeah.
And you can't get it through your friends and family, and you can't get it from people around you. Like it's no longer possible for that amount of money to get it from the usual. You can't get it from sales. You probably need 10 years of sales to get a 10 million for the team of people that you're actually serving. So you go to someone who has deep pockets, they come in and they say, all right, you want 10 million? We will take 25% of your business.
Yeah.
We own 25% of your business.
Yeah.
And that range can go really high.
It's like the Shark Tank.
Probably. Exactly. 60%. It really depends on the VC
Yeah.
that you meet. And they're coming in essentially to invest 10 million, knowing that in a year, 2, 3, or 4, there are other people who are going to bring in more money and they will take their 10 million out.
Okay.
But they still retain the 25% ownership for your business. Because remember, they started with you and they've owned that.
Okay.
Anybody now who keeps coming in is going to take a portion of your business. 5%, 10%. Like as the valuation of your business becomes bigger and bigger, everybody who comes in wants to be able to give you more money and get a portion of it.
Yes.
So that continues to happen. So now those are now the rounds, the pre-seeds that you keep hearing about.
Yeah.
Series A, Series B, Series. And usually the difference there is the amount of money that you get. And at what stage are you as far as your product is concerned? Yep.
Okay. And the Series A funding, is it that different from the venture capital?
So VC will hand it over to now money keeps coming in from different groups of people. A consortium of investors will come in and say they want to give you 100 million, right? If it's the first time you're doing it, that's Series A. If it's Series A. If it's the second time you're doing it, because you're going to be doing it in rounds. Remember, you're not doing it just once, right? You're going to be doing it in rounds. And maybe you're doing it in rounds of every 2 years or in rounds of every 1 year, depending on how big and how fast your organization is growing.
Okay.
So every time when you come back to the marketplace and say, I want money, that's another series.
Yeah.
And I'm coming back again, I want 100 million. That's another series. I'm coming back again, I want 200 million.
Yeah.
That's another series. And so there's a group of people that have to form a consortium in quotes at each series to be able to give you that money. Usually it's not just one person, a bunch of banks. It's a lot of money, like 100 million. Not just one organization can give you that. They would come together in that series to be able to give you that money.
Right.
And every time they will be taking a small portion of your ownership of your business.
Yeah.
And remember the people before that, some of them might want to exit. I gave you 50 million. in the first round. In the second round, I want my 50 million back with a profit of 20%. So I want to take 70 million and I go, fine. Like you're exchanging that ownership you have with the next group of people who are actually coming in to give more money. So that continues. And if your idea was after 10 years, you want to be in the stock market, then now you're going to go into the stock market and everybody else can now exit and then it becomes a public company.
Okay.
Yep.
And why is it that we see a lot of foreign investors investing in the local startups and not local investors? Because, for instance, we have the European Union, which is in Belgium, and then we have a Transformational Business Network. Okay, that's in Kenya. Then British International Investment, Village Capital, those ones are foreign investors. But we don't see a lot of local investors.
Yeah.
What is the deal with that? There's no support, or
I think
we are poor?
I wouldn't say we are poor, but I think mainly it's just cultural, like the mindset we have here is to do things by ourselves. It's an African thing. And it's something that I have a whole grind with. If I wanted to start a business, I'm not like trying to co-found that business. I'm not looking for people to, I want to own 100% of it. It's a mindset that we have that I think over the years is definitely changing. But people want to do their thing themselves. Nobody wants to share in this success with like other people. That's not the mindset we have. We also are not in the mindset of, I can just give someone money and they can go and do their thing and expect them to pay me back. Like that is also, it doesn't exist, right? People fear, like, if I have money, I want to be the one doing whatever it is that I want to do with this particular money. So it's a mindset thing. Now, the West has had capital markets for a long time.
Yeah.
The idea of I can give money to a company over 5 years and I expect them to return 20% every year and they diligently return that money to me. So that culture already exists out there. And so they're always looking for opportunities to be able to invest. We still don't have that culture here where we trust our capital markets. I think if you think about it, how many Kenyans have money in the stock exchange, Nairobi Stock Exchange? It's a very small percentage if you compare that with like New York or with like London. A big percentage of the money that is sitting in, let's say, the NSSFs of those countries are invested in the stock market. But so the mindset is there, the culture is already there, like people already do it out there. They've been doing it for some time, since the 1900s. And we are only just starting recently to start to think about capital markets and putting money aside, investing in a business, putting it in a startup. That mindset didn't exist before. So partly it's just historical, right? Like historically, Africa has never been doing this. The West has always been doing it. Now, opportunities, right? People who always thrive in problem solving are the very same people who will almost be like, there's an opportunity there. We run away from problems. Think about it. Like if there's chaos in Tao, we're not trying to think about, is there an opportunity here for me to solve this problem and get paid for it?
Yeah.
I'm always thinking, Sinishida, I'm out of there. Like we don't have that. We haven't been built in such a way that we're always thinking of problems as opportunities. And so you find that someone from outside Kenya comes into Nairobi, sits in a place for like a month, sees the gap, and is starting to think about how to solve that gap, and then a startup is born. But we've lived in that village for the last 20 years. We have never thought we needed to solve that problem, right? So it's like we are immune to the problem. Like it's a problem that has existed for so long. We are used to it. We don't think we need to solve it.
Yeah.
And yet someone who's not used to it comes in, looks at it and is like, wait, this is not acceptable. Like we need to solve this particular problem. And then now they have an idea. They go back and say, I need 1 million for this. And 1 year later, they're raising 100 million, right? And then we're like, what just happened here?
Yeah.
So it's that. Like we live in this problem so much, we've gotten used to it. And that's the problem. Like we're not trying to solve a problem because Ababu, we're just used to it. And so someone from outside comes and does it. So that's two. And then the third one is obviously the policies around, if I give you money and I'm expecting you to pay me back, can I take you to court? Can I take you to court? Right? That's the thing. is it possible for me in Kenya, in Nairobi right now, if I give you 100 million and you squander it, can I take you to court? And there's a legal procedure where that money will come back to me. People don't trust that system enough.
I know. I don't blame
Because
them.
people don't trust that system enough, that market is not going to exist where money is going to be given for startups by Kenyans, right? Until that structure is actually there. The Kenyans that I know that are giving or putting money to startups, they're basically putting money, they're investing in the person. They trust that particular person.
Okay.
They know that person, we've grown up, childhood, najua baba yako, mama yako. Like, I know you. You're not going to run away with 100 million. Like, I know you, so I'm going to give you
And also,
money.
I've seen local investors putting their money on established businesses.
Yeah.
Yeah, is it I think it's a trust issue.
It's a trust issue, exactly. And you nail it right there, because remember, an established business has a board, has structures in place, has been registered with Gava, pays taxes. It has a reputation that it needs to protect. And so an established business is more trusted.
Exactly.
You as a startup, you don't even have an office.
They can't risk it.
Exactly.
Yeah.
So outside of Africa, the system works. Like, if you took my money and ran away with it, the system will find you. And so people trust the system. They're just going to give money to the idea. Here, they give money to the personality and not necessarily the idea.
Yeah. And there's an article that you wrote on the USAID cut and how startups in Kenya, not even in Kenya, in Africa, were depending on the aid from USAID. So how has that cut really affected them? Because in Kenya, I'm thinking of the health startups, like I think Ilara. It's Ilara Health?
Ilara Health, yeah.
Yes, and maybe agricultural startups. How have they affected them?
So we have a couple of startups that maybe got commitment money, right? Commitment money pre-Trump. You're going to get, $2 million over a period of 3 years. And you were given a third of that last year. And then you're supposed to be given 2/3 of that over the next 2 years. But now that funding is not coming in. You've hired people and you've invested in ordering new medicine from India. It's sitting in your warehouse somewhere and it needs to be distributed to the different health centers that you have around Kenya. Now you need to pay the supplier, but the money hasn't come in. And that money is not going to come in. What do you do with all this medicine? That medicine is not going to reach the people that it was intended. And now the team that was on payroll, off of that money that was supposed to come from USAID, they can no longer be paid. So now you have to let them go. And now you're stuck with a stockpile of medicine in a warehouse that was supposed to be distributed. But the vendor or the supplier is like, you haven't paid us yet. It's now 90 days. They're sending you demand notes. So it's a mess. It's a mess because the startup, the idea here was, getting medicine to the underserved and find a way to get it there. And then the funding coming from USAID was supposed to facilitate that. But now that funding is no longer coming. So you do have sick people who are not going to get medicine. And you have 100 people who you hired that now don't have a job for the next 1 year. You have to let them go. And you have a supplier whom you have to pay, but you don't have money. So either you sell your assets and pay them and find a way of reselling this medicine somewhere else, or you just shut down. And so that's the risk. The risk is many more people are going to get laid off. And then people whose idea was invested or facilitated by USAID money will no longer be able to implement what they had planned to implement this year. And definitely not for the next 4 years, for as long as Trump is still there. And then they will have to do away with their assets to pay their debt. And in a way, that essentially means they will have to close down. So last year, we saw maybe about 10 startups close, the big ones.
Yeah.
I think my prediction is this year, we're going to see way more people,
Way more
startups
shutting
actually
down.
shut down. Unfortunately, right?
Yeah.
But remember, the precedence of the startup is to solve a social need. There was a gap in society around any of the sectors, healthcare, education, and all of that. So they are serving humanity, they're serving people and their lives behind the projects that they're actually executing. So those are lives that are going to be impacted, right, at the end of the day. So we might say, okay, the funding doesn't come in, the startup is not going to get money, they're going to shut down. But what about the people that they were serving?
Yeah.
We are forgetting about those people. What about that, right? Gava is not going to come and close that gap because remember, the startup is there to close the gap because Gava wasn't even doing it, right? So now there's an issue there. So many more people who are dependent on the idea,
yeah.
will now fail to get the service that this idea was bringing to them.
And that's quite unfortunate. And I was thinking, if you are depending on the USAID aid, you don't have other investors, or was that like their end, like their last resort?
No, not necessarily, because organizations usually have multiple funders, and it's not just one source that they're dependent on. And what I am seeing with the different organizations that I'm talking with is that where there is a gap with USAID, these other sources have actually come in to say, we're going to increase, right? So you have, let's say, 10 funders. USAID is just one of them. And USAID was funding 10% of your budget, right? So these other 9 funders are actually coming in and say, okay, let's come together, let's talk. Like, I can increase my funding by 3%. What percentage can you increase yours? By 1. Okay, now we're 5. Now we're okay. Now we've all contributed to the 10% gap from USAID. Some of these organizations are actually being saved that way. The other people who are funding have now said we can increase to fill that particular gap, which is excellent.
Yeah.
So for those are not closing, and we're starting to see a lot of that happen. So money that was supposed to come from the UK will increase, or from Belgium, or from any of these other development partners. That funding is going to increase, because they're like, I think we believe in the mission. The mission is excellent. We want to be able to see you succeed. How much more do you need if USAID pulls out? Oh, we need 24 million. Okay, let's see how we can fundraise on the side for that particular money. If not 24, maybe 14, maybe 10, something, so that impact is not felt at scale.
Yeah.
So a lot of that is happening, and that's the good news. Yeah.
All right. And right about now, we're going to take a short break. Do not go too far. Keep it No Hits Radio. Welcome back to the Morning Express show on No Hits Radio. If you're just joining us, we were talking about the dynamics of the startups landscape. And so far, we have covered the challenges that the startups are facing when it comes to funding. You can always connect and engage with us on our social platform. You can find us on our YouTube page at No Hits Radio, Instagram at nhr.live, TikTok and Facebook at No Hits Radio. And to continue with our conversation, I would like to tackle the white founder perception. Have you heard of that?
Yes.
Yes, where to have or to secure investors, you have to have a white face in your company.
Yes.
And it's so saddening how we have so many local startups, but the ones which have white investors are securing more investors than the local startups.
The local ones.
So why is that? Okay. I'll just say it's racism. It's who you know, you're familiar with someone, so you invest more.
Yeah.
But let's talk about that perception. How true is it?
Yeah. I mean, the numbers or the statistics show that, organizations or startups or companies that in this sector that have a white founder makes, or at least fundraise, almost 20 times more than the fully local founders teams. So yeah, it's, without mentioning words that are very strong. So this is how I actually look at it, right? We trust people who look like us.
Yeah.
It's just natural, right? Or people who speak like us.
I agree.
Right? Or people. So I know people want to say, oh, it's racism. Like, it's just
human
if I
nature.
went into a space, let's say I go into a new country.
Yeah.
Right? New country. And this happens all the time. Like, if you're flying out, you go into China, you saw an African there, like 10 meters away from you. What's the instinctive thing that the two of you do? Is to walk towards each other and say hello and start a conversation. But you will ignore everyone around you who doesn't look like you.
Exactly.
Because it's just human nature. Like, because, we have some biases. The biases is such that we make decisions based on comfort. We make decisions based on trust. And we form trust bonds quickly based on, does this person look threatening? If this person looks like me, probably he's not threatening. He's probably a friend, right? And then you can work through that. So it's more evolutionary, and I know we want to bash the West for like doing what human nature just does.
Yeah.
I think if we reversed the roles and we went into other countries and we found black founders there, we would probably give those black founders more money than other founders who looked a bit different. It doesn't make it right.
Yeah.
It doesn't make it right. I'm not justifying it, but I'm just saying there's an explanation to why if you're talking about trust and giving money is about trust, then you want to give money to people who kind of look and talk like you. But it's just what it is.
I mean, even if I go to another company, I feel that perception has been in my mind for a while.
Yeah.
I tend to trust a company that has a muzungu. Even if I see there's so much bias in it, I just tend to trust it more.
Yeah. I think that's just 5 years, not 5 years, sorry, 50 years of colonization.
I know. We're still hangover from the colonization.
Yeah, I remember having this conversation over the weekend with a friend about the reason why we hold back and we don't, what is the word? We don't defend our positions. We are not aggressive enough like other races. We are not vocal enough. Because remember, in the 50s, when the Africans were being considered a subservient, race, it was indoctrinated in us that we are less of a people compared to the other races at the time that were controlling and dominating us. So that mindset existed, and it's been passed on, and I call it trauma mindset because it's been passed on from our grandparents to our parents and now to us. And so fortunately, I hope I can break that cycle with my kids, and I hope everybody who's in the Gen A, Gen Z group can actually break that cycle, and you're able to have agency. In the 50s, Africans didn't have agency.
Yeah.
Agency in the sense that you can't do what you want. You can't say what you want. You cannot make decisions on your own. You need to be able to consult. Someone else need to be able to do that for you, not you. You don't have agency. Your job and your place is there. If you're there at the gate as an askari, that's where you need to be. And if you move away from there, unapigwa, right? That's how it has always been. And so we've kind of had that mindset for a long time that it's become part and parcel of who we are. And we behave in ways that are ridiculous if you look at it from outside.
Yeah.
Like, why would you trust a white person more? Right? Like you go into a company where there's a Muzungu and the mindset sahini, you trust that company more than if it was actually being run by an African.
Exactly, yeah.
Not that the African is not trustworthy. It's just there's this trauma that has lived with us for 50 plus years and we just needed to shed it. It's going to take time to get that mindset shifted, right? And so there's also that angle when it comes to startups, right? And social impact organizations is that, okay, if the Muzungu is coming to deliver this service pale Kajiado, watu wa Kajiado wako, hey, looks like this is something that they can sign up for.
Yeah.
Mimi na wewe tukienda kufanya the same thing,
mutafunga hiyo biashara very soon.
No, what is it? Kuna kitu. There's something you're hiding here. Oh, there's something else, right?
Yeah.
And you have to go above and beyond to explain that your mission is this and have more people come in. But it will take a bit of time. So that mindset is still there. But I blame colonization for that.
Yeah.
And I think now we're kind of... The fact that we can have these conversations means that we recognize it. And the fact that we recognize it, then we can do something about it. So there's a whole new generation that definitely is going to change that mindset.
Yeah.
For sure.
And talking about investors, speaking of there's this bill, the startup bill, that says they're going to allow 100% Kenyan investors, and they're needed to only spend 15% of R&D is research and development so that they can have government support.
Yeah.
I feel, okay, there's a good side and a bad side to that. I mean, local investors, startups will be recognized. But then again, it will chase away investors from foreign investors, which means that this startup will not be scaled to a global perspective, will not grow in a way. So how do you see this bill?
So definitely, and I think it will be challenged. I understand that it's going to help the local institutions or the local startups to actually to blow up, which is perfect, right?
Yeah.
But we are forgetting that we are now essentially a global economy. Like when you have an idea in Nairobi, you want it to go to East Africa, you want it to go to Africa, you want it to be able to go to East Asia, you want it to go to the global south, whatever. The idea should not just be a Nairobi idea. And that's where the money is, and that's where the opportunity is, and that's what makes that idea great, because it can scale. If the idea doesn't scale, then it's not a worthy idea to invest in, right? So at the back of that, when you make restrictions like what is there in this bill, it makes it impossible for you in Kenya to scale outside Kenya, right?
Yeah.
Because no one is going to give you money if they can't get a share or a portion
That's
or
what I
an
thought.
ownership,
Yeah.
right? And if you're going to say 100% local, then what happens to the external money that has been coming to be able to scale these ideas? Any idea that started from Africa that has blown out needed money that came from outside Africa to be able to allow it to scale. So there's got to be a place for allowing ownership outside. That's understandable. So I feel like that bill is going to be challenged at some point. India tried it before. It didn't work.
It failed, yeah.
Many countries have actually tried it. It didn't work. I think China is trying to grapple with it as well, trying to get outside technology to come in, or IP, right? Like the intellectual property from outside to come in to be able to scale the economy.
Yeah.
They're struggling with it, but every country is kind of making it a little bit flexible. So I'm surprised we're going in the other direction with making it completely impossible for like outside people to bring in money. It doesn't make sense. So it's still in the discussion phase.
Exactly,
And I'm hoping that by the time it's being approved or being signed or ratified, whatever the case might be, that many more people will contribute to that conversation and say, this doesn't make sense.
It will kill our economy.
Yeah,
you know?
it will chase everything is going to go. Like the big guys are here because we had in Kenya a very flexible, bills or laws that allowed for investors to come from outside.
Yeah.
And they're coming here for that. And now we're trying to chase them away by changing the rules. It doesn't make sense. Yeah.
And I've seen, okay, let's talk about startups shutting down. I've seen other alternatives. Startups, you can hear startups shutting down and entering the liquidation stage. And you're like, isn't acquisition an option? Or IPOs, that's initial public offering. Yeah. Why don't they opt for that? Because I recently I read an article on Edukoya. It's an edtech startup from Nigeria. I'm actually impressed by how they did things. They just saw money is not coming in, but instead of pushing and going bankrupt and selling all their assets, they decided to pull out. But still they have that money to also venture into another business if the edtech is not working. But you see other startups, they're actually selling their assets. They're in a complete, they've hit rock bottom.
Yeah.
Why do they go to that extent?
Yeah.
Yet there's acquisition. And there's IPOs.
Yeah. Those other parts definitely exist. And we can take an example of Kune that within 1 year raised 1 million, then raised 100+ million.
Yeah.
And went from 5 people to 100 people in a year. And then they realized that, hey, no, nobody is buying $3 plates of food here. Cheap food is there for less than $1.
Yeah, chapo beans all the way.
That exists. They didn't understand the market enough to know that that business idea doesn't work here. So you can't acquire that.
Yeah.
Sindio, because the premise of the idea is already wrong. Right? You can't acquire that. You can't take that to the IPO also. Because again, the premise of that idea is already dead, right?
So it's about investors seeing that this is actually a potential business to actually invest in and bring it up.
Exactly. And remember that if you're going to go the direction of IPO or go the direction of acquisition, your product market fit already exists and there's traction. So the guys who go in that direction are usually guys who've now reached 1 million, right? The business is thriving. They don't have financial issues. The issue is just to scale.
Yeah.
It's not a money problem. It's not a cash flow problem. It's not the market doesn't understand your idea problem. Like all those things, it's already done.
Yeah.
And usually that would be like after 10 years. You'd have to be here for like 10 years before someone says, if you've existed in this market for 10 years, then your business model works, you have customers, everything else makes sense. Now I am ready to acquire you. Or now you are ready to go through the IPO process. But startups have been here for 3 years. It's not yet mature enough to know whether this thing is worth it, right? So no one is trying to acquire you. And then obviously you're not going to go to IPO because Nairobi Stock Exchange is going to be like, ipatie paperwork yako, like your books of accounts for the last 10 years. And they would expect a lot of the structures to already exist. And usually from startup to scale up to that point where you are actually going to the IPO, there are steps of sort of changes you need to do in the company to be able to get ready for that. So you can't just go from startup to IPO. That doesn't happen. Kwanzaa, there's time, and then there's scale, and then there's so many things that you need to be able to do. Those startups that are shutting down haven't gotten halfway there. Not even a 20% there. So those parts don't exist for them.
Okay.
They don't. Unfortunately, they
Is
don't.
there another option aside from the two, acquisition and IPOs?
I think at the end of the day, if you're failing because your model doesn't work, meaning you don't have enough customers who are paying to justify you existing. Literally, I don't see any other path.
Yeah.
Like, what can happen? Maybe you join with another company that needed a small piece of the idea you have to essentially build the bigger idea that they have to make it big. Like the way WhatsApp was bought by Facebook, right? 20 billion, whatever, 18 billion at the time. Facebook was already into the social media space. They're like, but we're not in chat. WhatsApp is already doing chat. It's part of social media. Let's go and get it. In that context, it makes sense. But WhatsApp already had its own people. It had its own traction. It had its numbers above 1 million at the time, probably 1 billion. So the numbers were okay and going well for WhatsApp. They didn't need Facebook. But these startups that are failing, you see, it's a different story, right? The idea, the concept, the premise, the cash flow, the founders, the money, like they had so many other problems. Think about Reja for Market Force, trying to digitize the whole, making basically the ordering of goods and services for shops everywhere in Kenya. They can use an app to be able to do that.
Okay.
But if there are internet challenges, if those people don't have enough money to pay for the things that you're bringing to them, there are so many other dynamics in the mix that when I want to buy 1 item or 2 items and put in my shop. You want to sell me 10. I can't afford 10.
Yeah.
But I'll take the 10 and I put the 10, bags of milk, whatever, in my shop, but I don't have the cash to pay you. It will take me 2 months to clear my stock. But you need the cash now because your business or your startup is money heavy. And so now there's a gap there, right? You're waiting for me to pay you the money. I don't have the money. I'm waiting for customers to take my stock, which is going to take about 3 months. And now you're stuck. You don't have cash flow. You don't have money to be able to run your operation. And it dies there, right? So for the startups that are closing, yes, acquisition could be a path. IPO could be a path. But I can easily say that they are not ready for either of that.
Yeah.
Because the idea has failed. That's why the startup is failing.
So I've noticed we've talked about IPO, but we have not defined what IPO is. Maybe you can tell the listeners what IPO is.
An IPO is when, let's say I have a business of selling clothes. Yeah. My business has been in existence for the last 15 years. I have branches all over this country. I have hired maybe 1,000 people. My business is making 1 billion in revenue, Kenya shillings, on an annual basis, whatever the case might be. But everything is going well. I've got legal department, IT department, support department, infrastructure, logistics, all of that. Everything is going well, right? But now I want to go big beyond Kenya. I want to go to Tanzania. I want to go to Uganda. I need way more money. I go to the capital markets and I say, I want to sell shares of my company. And for the company that is valued at 100 billion, I want to raise 300 billion, right? And so in the stock market, I do an IPO. An IPO meaning it's the initial offering. It's the first time I'm coming to Nairobi Stock Exchange.
Yeah.
And then people buy my shares at a price. So my shares, maybe I float it at 100 per share. So I raise my 300 billion. I use that money for the growth that I wanted. And now I have people in the public who own a piece of my company, right? So when I come to the stock market, Nairobi Stock Exchange, and I ask for so much money, that's usually that process is called an IPO. And then basically what that means is that the public is invested in my company now. Think about the big companies here, Safaricom, the banks, all of them. Most, if not all of them, are in the stock exchange, Nairobi Stock Exchange. So they keep raising money once in a while from the stock exchange. So the startup version of that would have been VC, venture capital, but that's for a group of people. It's not for the public.
Yeah.
But if you wanted the public to give you money, you would go to the stock exchange. But if you want a group of private people to give you money, you'd go do VC and Series A, Series B, Series C. But that's all private. It means private entities are the ones giving you money, not the public. Now, the reporting dynamics around being a public company and a private company are different, right? There are some regulations that require that if you're public, your books accounts are public, some of the decisions you make have to be done by the board. You have to have shareholders come in, AGM every year, make decisions there. When it's private, you make your own rules. It's not the same, right? So people could take the stock market path, IPO, or do the private market path with the VCs and the Series E. It's got its own pros and cons. You have a lot of scrutiny if you do public offering in the stock market. Like kila kitu unafanya, everybody's in your business.
It has to be public. You have to post your financial.
Yes. And if there's a small change here and there, if you're in the newspaper,
let the public know.
Your reputation is on there's just so much scrutiny, and you have to report on a quarterly basis, and you have to justify having the people that you have in your team. Sometimes the people that you have in your team must be qualified as per the regulation, like for banks. They'll need you to have so many specific experts with this level of experience. So you kind of have to hire those people whether you want them or not. In the private space, you don't have to. You make your decision there. If you don't need a CFO that is 30 years experience, while in the banking sector, you're required to have one. If you don't need a cybersecurity CISO like in the private sector, in the banks, it's a must that you must have someone who's dedicated to that. So those are the variables, right? There are pros and cons in going to the public space in the stock market to be able to raise money. And that's usually means scrutiny. Kila kitu unafanya is public. You have to be able to declare everything.
And I feel I would say the same for acquisition. I feel like when a company is acquired, you change your structure, your culture. Is it so?
Yes.
Because recently, I mean, we have seen Mobius acquired by Silverbox. I'm actually excited for Mobius. You know, my favorite car is a Jeep, and I feel Mobius gives that Jeep vibe. So I was vouching for it. And now that it's back in business, yay, Mobius.
Yes. Yeah, I definitely like those cars. Yeah.
Yes. And we can maybe explore, we have seen that we have tackled investors as one of the issues, one of the factors that leads to startups shutting down. What are other challenges aside from investing, investors and all that?
And
what
the
are
money
other?
aspect,
Yes.
right? And the number one is basically, do you have a problem you're solving? Like, it's as basic as that. But you'll be surprised how many startups have been created and they don't necessarily have a problem they're solving. And I'll go back to the poster child of that story, Kune. See, they came and they said there was no affordable food in Kenya.
Yeah, and they received backlash. Yeah?
Exactly.
Like, have you seen chapo beans? Have you seen beef and ugali?
You can get a whole meal for 50 shillings, 400
Exactly,
shillings.
yeah.
They were selling theirs at $3, which times 4 is what? Like 450? Is that affordable?
It's not.
That is not affordable, right?
Not for the comrades. No.
So the number one reason why startups usually fail is they just didn't have, They thought they had a problem they came to solve, but they really did not have a problem they came to solve. They lied to themselves that there was a problem they were solving, and over time, they ended up finding out that, you know what, we were just disillusioned. Like we were just lying to ourselves. And that happens. Like, you have a business idea and you thought that you're a genius. If people are not paying for that service, the market is already telling you that, no, you're not a genius. No, whatever.
There's
you
no
can
problem
do
to
X, Y, Z,
solve.
but no one is buying. No one is buying. That is all that matters. I usually say that, do you have customers? If you do have customers, are they repeat customers? If they come back again, that's validation. And are those customers talking to other people, telling them about your product? If that is happening, that is also validation right there, that indeed you have something here. But if none of that is happening, no. So one would be that the premise of the startup was just wrong. There's no problem that they were actually solving for. The next thing would be just, they don't understand the cultural dynamics around the space they're operating in. Right? Kama watu wanapenda, if people like to go to the shop and it's a social activity, people go to the markets, it's a social activity, and we think they go to buy, then we are missing the cultural aspect of what happens in the village, right? People go to the markets, it's very social for them. They meet their friends there, mama who, hey, Shule, nini, how's your daughter? Hey. It's a whole conversation. And they will come back with one or two things that they've picked. The social component of that interaction, we are forgetting, and we're thinking, oh, we don't need markets. We can get the clothes to them. Let them order online and we deliver it to their doorstep. And then all of a sudden they're lonely at home. They're like, I'm not interacting with the shopkeeper. I used to go there and I'm having stories with the shopkeeper every other 2 days. So we are missing the cultural aspect of the interaction in this solution that we're bringing of convenience. And you wonder why people are not buying. Why are they still going back to the shop? Why are they still going back to the market? They're going there for socializing. That's the aspect of it. They don't want convenience. They do, but the socializing aspect of it, in this case,
you can't take that away.
You can't take that away.
Yeah.
And so sometimes we have products that we put out there in the marketplace and we forget there's a cultural component around this thing we are solving.
Yeah.
And it's probably not this thing we're trying to solve for, right? Think prices. You can go to a shop, pay slightly higher because you're having a conversation and the person that you're meeting over there, there are things that he's telling you. And that happens. Like you walk through town, there are shops selling the same clothes at the same price, but you prefer to go to this one. If that guy increased his price by 300 shillings, you will still buy from him. You've created that connection, the human connection aspect of it. So sometimes we take that away from the problem solving and creating a startup, and we forget there's a cultural aspect surrounding this problem that you're solving for. If you solve this problem, which cultural aspect are you taking away? And you need to think about, because it might backfire, because people still want to go socialize in the market, but you want to close the market so that you can deliver to their homes.
Yeah.
It saves them 1 hour of walking to the market, right? Those are your metrics. Now we deliver to your home. You don't have to spend 1 hour to go to the market and walk in the sun and sweat. But the guy's like, no, I have friends over there I want to go socialize with, so I'm okay. You're trying to solve this for me, but I'm fine. No, I'm okay with going to the market for 1 hour. So now that's also the other aspect of it. And I think Market Force, Reja kind of fell into that basket where the aspect of socializing and interacting became more powerful than solving the convenience issue for the shopkeepers.
But I feel that would have worked well with the Western, not the African side, because,
Of course.
Yeah.
And that takes me to my third point. We love to copy paste. We just love to copy paste. See, this idea worked in South Africa. Let's try it in Nanyuki. Or this idea has been working in New York. Why not do it in Ghana? No, those two places are not the same. The mindset, the social class interaction, like Evo. If you love to be in your house and you don't like seeing people, convenience is something you'll pay for. Africa, we're very social. We like to interact. If you take away the interaction, then nobody cares about the convenience. It's really the sad truth, but many people don't realize that is actually, and again, because we are copying pasting. This worked somewhere, and now we want to bring it here. It worked in Latin America, Copia Global. It worked in Latin America. It should work in Africa, yeah? Let's come and do it here.
Shut down.
Africa is different. Yeah. So there's that aspect as well. The fourth one would just be your financials. Yeah. And cash flow, they say cash flow is king. If you don't have money to pay your vendors to give you product that then is part of your value chain, the work that you do, then you can't deliver that service. Let's say you don't have money to order medicine and you're a health startup.
Yeah.
You need to order medicine from India. You need, let's say, $1 million. You have customers that owe you $10 million. You have no money, but customers owe you $10 million. But you need to order
The medicine
worth $1 million.
Yeah.
What do? You go to a bank and say, nipatie loan. Give me $1 million. I want to order so that I can reach these customers that I have, right? You have debt, the debt keeps accumulating, and you have suppliers who are saying, hey, what's going on? Pay me, all of that stuff. So cash flow will kill you. If you don't have money to pay for the services, you will not be able to deliver the services to the stakeholders.
Yeah.
So usually that squeeze ends up affecting them.
Okay, now, Tim, because of time, I'd like us to touch on the trends that we're seeing on startups and, advice to your entrepreneur. I mean, for one, I'll say the trend that I will be seeing. If for the USAID, I'll say that startups will be struggling, but not shutting down. But if that startup bill is passed, we're going to see a lot of shutdowns. So what are the trends that you anticipate to see in startups, and what advice would you have for the upcoming entrepreneurs?
So I think the realization now that no one is coming to save us is starting to sink in. There's been a lot of money that has been floating around. And so people just, the money is there. I'm going to be able to raise $1 million, $10 million dollars or $100 million. People are throwing money at AI now, right? Like, even if the concept doesn't make sense, money is being thrown. So everybody's going to be like doing a startup for AI. And then a year later, they're going to shut down. So there's that group of people who are just running after what's the shiniest thing in the room, which idea is getting the most traction. 2, 3, 4 years ago, fintech was getting all the money and everybody was like, fintech startup, this, that. And then the market is crowded. And then the market starts to do its thing. Basically, shed out the ones that are inefficient and a few people remain. And those ones continue. So that trend is not going to change. I see many more people going into the AI startup space to build their new idea around AI. And they're going to get a lot of attention. It's always been the case in the past. Agri-tech, there was a time it used to be like the hottest thing. Health tech came, hottest thing. Ed tech, those trends existed. And so even now, right now, I think looking forward 4 years from now, the AI space is going to have the most funding coming into it. And therefore, we're going to see more startups come up in that space. The existing ones, though, who are dependent on money coming in from the likes of USAID, we are going to see those ones shutting down or at least scaling down. And some of them might probably come together and say, hey, we do the same thing anyway. Why can't we just merge and serve the same customers? We serve the same customers. You serve a different segment, I serve a different segment, but we can as well come together because the funding is limited and they might make that decision. But definitely, there are those that are going to shut down and then there are those that are going to basically thrive. Health tech, which has depended so much on development funding, like USAID, UKAID, like the kind that comes from the different countries. I think those are going to be the ones that are going to be impacted the most in terms of less money coming in. Ed tech, same thing, right? Ed tech, the margins are so thin when you're running ed tech because you're trying to deliver education using a digital platform, and internet is a big cost to the customer or to the parent. And so once they pay internet, there's a small thing remaining that they need to pay for. And so that becomes an issue as well. So with those sort of startups where the margins are very thin, I see those ones having sort of struggling, so to speak, over the next 4 years. So those are the things I'm going to be saying. You said at the very end, what advice do I have for entrepreneurs who want to get into this? One would be just make sure that you are solving a problem that exists.
Not being delusional.
If there's any takeaway from this session today, it should be that just be sure that you're solving a problem that exists. Don't lie to yourself. Don't cheat. Don't be delusional about it. I think the Gen Z said delulu.
Delulu is
Don't-
the Selulu.
Don't be delusional about it. And sometimes halfway through, like you could be doing this for 1 year, and then you're like, you know what? I really don't have a problem I'm solving. It's okay. Walk away from that because you're going to continue to inject money and it's not going to work. So that's
Yeah.
one. 2, watch out for your financials, right? If you're running out of money because your customers are paying you longer or later than you expect, you're going to close down. Cash sales are usually the best. Like you may exchange service, unanipatia pesa. Those are the very best ones because you get your money immediately. You don't have to wait 15 days or 30 days. Credit is going to kill you because you need to order from the supplier, package it, and then sell it. But you have to pay the supplier. You need money for that. 3 would be debt. Just watch out for that debt. Borrowing, getting money from the bank. It's a good thing if you're making money already. But if you're not, you should probably be, what do they call it? Bootstrapping. You should probably be using the little that you have. Get the money from your customers, invest it in your business to make it grow. As your customers pay you more, you scale the business that way. Instead of getting money that you borrow and then try to like scale the business. Like all the startups that closed out last year, they had debt. The ones that closed out 2023, debt. The example you gave for the EduTech for Nigeria, West Africa.
Nigeria,
right?
West Africa,
I think they had debt of 4 or 5 million.
They did.
Yeah. Like it's there.
Yeah.
So that's the thing. Like this is the funny thing. They were raising money, but they had debt.
Okay.
And there's the way that it was packaged within that arrangement that eventually ended up biting them, right? And so there's always debt somewhere in the book somewhere for, again, because your customers take time to pay and you have operational costs.
Take loans to
You have
facilitate
to go take
it.
loan.
Yeah.
And then now inflation happens. And then that loan is more expensive. The rate at the bank goes from 15% to 21%. You did not factor that in. You can't increase your prices by 5%. If you did, your customers are like, nah, we're not paying. So yeah, debt is going to always be an issue. So I would say bootstrap. If you can, avoid debt. Take debt as the last resort, but only if you validated that your idea is scalable and there's traction there. That's the 4th reason. And then the 5th one is definitely...
That's the last one?
Yeah, the last one. Surround yourself with people who believe in your mission.
The circle.
Yeah, it's the circle because being a founder is painful.
Yeah.
It's stressful. It's depression. Like you're going to be... That's what happens, right? So you want to surround yourself with people who actually believe in your vision. Hire people who believe in your vision. Because even if you don't pay them for 3 months, they're like, you know what? We're serving young children in the village. I want to do this. I can do this even if you don't pay me for 3 months. They need to believe in that vision. As someone, you haven't paid me amount 2 days later. Now you're stuck. You don't have a team. So that will be the last one. I think just surround yourself with people inside and outside organization or your startup who believe in your vision. That's very important.
I like the last point.
Yeah.
It's the people that you invest in that help you grow. You know, your network is your net worth. And that has been our guest, Timothy Laku, on the Startup Story. We have covered the challenges that startups fail in looking at funding, the trends that startups are going to have. And right about now, if you happen to tune in late and miss part of this conversation, this episode will be uploaded on our YouTube page. You can always find us at No Hits Radio. You can also connect and engage with us on our other platforms on Instagram at nhr.live, TikTok and Facebook at No Hits Radio. Support us by subscribing, commenting, sharing, and liking. Thank you once again for keeping it No Hits Radio. This is the Morning Express Show, and I have been your host, Joanne Kaberia. Keep innovating and stay innovative. Bye.